But that's answered it.
Good evening. Welcome to the Blanc Township Committee of the Whole meeting for Tuesday, June 11th. Ms. Lane, would you lead us in the pledge?
My pleasure. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
So we will start out the meeting with our approval of the agenda for this
So
evening.
moved, Mr. Chair.
Okay, there's been a motion to
Support.
approve. Support. Any discussion?
Yes, Mr. Chair.
Yes,
Can
Ms.
we
Massey.
have, a discussion about the policy?
Sure, about the policy manual.
Yes.
Let's put that under the operational issues and we'll make that item J.
Okay.
And we'll have a general discussion about the policy manual that we distributed one of our last meetings. Okay, with that, we will take a vote. All those in favor, say aye.
Aye.
Any opposed? With that, we will open the floor for public comment, and we'll start here on the left side of the room. Anyone have wish to make a comment? Okay, how about the right side of the room? Anybody care to make a comment? How about in the back of the room? Okay, seeing no public comment, we will close public comment and move our meeting back here to the board. And this time we will entertain a presentation regarding our audit. Good evening, Mr. Helisek.
Thank you, Mr. Supervisor, members of the Board of Trustees. My name is Dave Helisek. I'm an audit partner with Klein Moran. With me this evening is Michelle Lewis. She's an audit associate with our firm, and we're here to present the results of the annual financial statement audit for the Charter Township of Grand Blanc for the year ended December 31st, 2018. You should have in front of you 3 documents today. The largest one, which I'm not, is it electronically, or do you get the hard copy? Is the financial statement CAFR. I'm going to talk a little bit about this today, but it won't be the majority of the presentation. The majority of the presentation will be our graph package, and then I've also got a communication as well to those charged with governance. Prior to this evening's meeting, Michelle, I, and our in-charge Austin De La Cruz met with management to discuss the results of the audit. So we went through this big document in detail. One, just to make sure that we were communicating what it is that we had compiled and presented to the township based on the records that we're providing, but also to ensure that was including everything that was turned over for audit. As a result of our audit, we were able to give these financial statements an unmodified opinion, which is the highest level of assurance that we can give a set of financial statements. What that means is these statements as presented fairly reflect the financial position of the township as of December 31st, 2018, and the change in that financial position, the revenues, the expenditures, the cash flows, and the notes to the financial statements that are included. It's the highest level of assurance that we can give a set of financial statements. It was one that we were happy to give again as a result of our financial statement audit. In the opinion, there was included this year an emphasis of matter paragraph. An emphasis of matter is required when there's a significant change in the presentation of a financial statement year over year. So that we had talked about for the last couple of years the required implementation of a new standard for the township for the year ended 2018. We were referring to it as OPEB over the last few years, but it's really what it is for the first time it's recording the liability on the face of the financial statement for liability for post-retirement benefits. So the township properly had implemented that standard. It required actually a change to the opening balance sheet because the liability actually had to be reported as of the beginning of the year, and the activity was recorded through the year. There was some information on what exactly that adjustment was. It's located on page 49 of the statements. And it shows really what the balance was, and I'll let everybody turn to that. I was worried that not everybody had the statement. Mine's a little bit thicker because I put mine sign off on one page at a time. I know you guys are back to back. But on page 49 at the bottom, you'll see this change in accounting principle, and the paragraph will describe actually what GASB 75 was and what it entailed. This information is really not new information. This liability was actually, has been reported in the notes to the financial statement for some 10 plus years, but this newer standard actually required it to be brought forth in the statement and recorded as a liability, similar to what was done with the pension type funds and liability just a couple of years ago. You can see the adjustment and what it had done to the previously stated balance and what the beginning balances were as of December 31st, 2017 or January 1st, 2018, the beginning of the township's fiscal year. Properly implemented it, required standard, and as a result, we just put an emphasis on matter to make sure that the reader of the financial statement, if they were trying to compare year-over-year analysis, it would draw their attention, they'd understand why there was a change in that information. So I'm going to turn it over to Michelle, who's going to walk through the graphs. As it has been in the past, we'll spend a little bit more time in the statements. We'll talk about the graphs. I'll cover the letter. Feel free to ask questions as we go along. We'll also give the opportunity to ask any questions at the end if there's something that we haven't covered that you'd like to discuss. Thanks, Michelle.
Okay, thank you. If you could turn to the first graph. So what you have in front of you here is a 3-year trend of your general fund revenue. You can see that year over year, 2017 to 18, your general fund revenue increased about 4%. Your two largest sources of revenue, property taxes and state sources, both increased 4% and 6% respectively. Your interest income this year increased about $80,000 due to increases in interest rates. All of the other revenues are very similar to the prior year. If you can go to the second graph. So as your revenues increased, your expenditures actually decreased this year, about 1.5%. And the reason for that is twofold, really. Public Works and other, that line went down about $350,000 because you had a special assessment project in 2017 that was completed in 2017, so those expenditures weren't there in 2018. Your police line item, the expenditures also went down there, and that was because there was a higher contribution to MERS in 2017 than there was in 2018. If you look at all the other expenditure line items, they're very comparable to the prior year. So the next graph.
Michelle?
Yes, go ahead.
Can I ask a question?
Of course.
Is it legal to say that we had, you mentioned that from 17 to 18, we had a 4% basically increase, right?
Mm-hmm.
Could you take that 1 point, whatever it is, and add it to the 4% and say, for talking purpose, that it was 5 point something?
A net change in, so if we look at, let's go to the next slide and we can see where you're unrestricted. So,
Okay.
yeah. So if you look at your unassigned fund balance, you do see that that did increase. It didn't increase, it increased for other reasons. Your assigned fund balance is just what's left over after you're restricted, and your assigned fund balances. So yes, your fund balance in total would have increased more than just the revenue. It would have increased by the revenue and the decrease in expenditures.
Okay, thank you.
If you do look at your trend in fund balance though, you see that that blue section there, this year, unassigned fund balance is $2.1 million. And that's about 14% of your annual expenditures. And the township's policy, I know, is 12 to 15%. So if you look here, your fund balance has been in that range all 3 years. But what's even more important is the township has continued to put away towards those legacy costs, to the retiree health care and to the pension plan. And you're making yourself in a better position while still maintaining your fund balance. So that's what's really important in controlling those expenditures. So if we move on to the next graph. So far we've just been talking about the general fund. And you know that the township is much more than just the general fund. What this shows is the various revenue the various revenues that have been brought in by various sources. So your general fund, 15.4 million, the majority of that is property taxes and state shared revenue. You have about 1.4 million in your solid waste fund, and that is due to your solid waste millage. You brought in about 17.5 million in your public works, which is your water and sewer usage fees. And then you have about 57 million in agency funds that was brought in. And what that is, it's mostly your tax collection fund. So of your 92 million of receipts that were brought in to the township, about 57 million or 60% is really in an agency capacity, and only a small portion of that is actually held ultimately by the township. So if we go to the next slide, we'll see that those agency funds, your property taxes, the township collects 17% for yourself. So that means average homeowner, you're paying $1 for taxes, only 17% actually goes to your fund balance. And I think that's important, for the public to understand that 17% of that is your millage. The rest, 83%, goes to your county, your schools, colleges, that sort of thing.
We hand this slide out to people quite frequently.
Perfect. Yeah, it's something that a lot of taxpayers struggle with.
Mm-hmm.
Any questions that we can answer? If not, I'll turn it over to Dave.
Thank you, Michelle.
Thank you.
Commissioner Massey, we answered your question on the revenues.
Yes.
Okay.
Yes, you answered
Trustee.
correctly. Yes.
Sorry, trustee, I was an accountant. I'm back on my commissioner role. So I wanted to cover briefly the letter to those charged with governance. You may recall prior to the start of the audit that we sent out a communication to the township board. We kind of laid out a plan as to what we were going to do as part of our audit. We identified the risks, the different areas that had audit risk, and every audit has risk. It's all relative, so we'll spend more time in the areas that have a greater chance of a potential misstatement. We talk about the process and how we're going to address that and how we'll come to a conclusion. And we also give the ability to communicate to us if you have any specific current concerns that you'd like us to look at and incorporate into our audit process. So that was what we call our pre-audit communication. This would be our post-audit communication. And really there'd be two required communications. The third one is a legislative update, kind of, and we'll talk a little bit about that. Usually we'd start off with our section 1 would be an internal control letter, and what that is if we come across, as a result of our audit, either, I'll use the audit terms, material weakness or significant deficiency within the system that would hinder the township's ability to quickly address any potential misstatements or appropriation of assets, whether it happened or not, just based on the control system, we would report that out to you. Or if we had a significant or what we deem a material journal entry that we had to make, if we run across that, we'd suggest that change to finance. They can either agree to accept it and incorporate it into the statements, or we can have further discussion as to why it wouldn't be included. We have no such communication this year, so as a result of our audit, nothing came to our attention that would have indicated that there was a significant deficiency or material weakness within the system. So you should feel good about that on two accounts. That means that, at least from what we've tested, the internal controls are strong. We've got a good segregation of duties. We don't give an opinion on internal control. We just do an assessment and tailor our audit approach accordingly. The second part I talked a little bit about was any significant journal entries. And why that's important, I mean, it's important to us because we don't have to make, big changes to the financial statement, but why it's important to you is the interim information that you get when we don't have to make significant adjustments at the end of the year means the information you're getting throughout the year is pretty good. It's not like, okay, I don't know what I'm getting at the end of the year. The auditors come in and make a bunch of adjustments, and what I'm looking at during the year might not be reflective of what I'm actually looking at during the year. So it should give you a pretty high level of confidence with what it is you've seen. We have Kathy and Yvonne here today. They've done a great job in the years that we've been working with them of reporting and recording the information. They work well with us. They get us the information that we need. But to be honest, a lot of it is stuff that's accumulated throughout the year, and they're just putting it in a format that we can use in audit. So whenever we have no communication on that section 1, it's really reflective of your finance and your management teams. Now the real section, so I'll call that section 0 because we didn't have to include it. Section 1, this is a required communication under the auditing standards. And it just talks a little bit about what we did do. You'd hope that this would be as plain as it possibly can. What you're really looking for is exceptions, because if there's exceptions that we ran across that really weren't internal control related, we would talk about it here and bring it to your attention. I would say really the only exception that I'd bring your attention to is at the bottom of page 2, where we're once again required to discuss the implementation of a significant accounting standard. And that again is standard number 75. We've got a really nice summary at the bottom that shows what your net position was from a governmental activity side and a business activity side, and then a total township side after implementation. So that's a restated December 31st, 2017 number. That's a GASB 75 compliant 2018 number, and you can see the township's total net position, which does include infrastructure, is just over $74 million. If we go on to the next page, just real quick, we didn't have any difficulties in performing the audit. As a result, that probably would have come up in a section 1 area if we did. We didn't have any disagreements with management in the way that they were recording the information or their understanding of how standards shouldn't be implemented. To be honest, if we had a disagreement, we may not have ended up in an unmodified opinion, and we may have been before this board a lot earlier than we were this evening. Corrected and uncorrected misstatements, I really talked about there was no significant ones that we needed to report on. And then finally, we don't run into it very often, but if we did disagree with the way that the township was either reporting some information or the implementation of a new standard, and we just kind of came at an impasse, and the township decided to go and ask someone else. We call that shopping for opinions. That didn't happen. If that were the case, we would have been including that in the letter as well. So I covered a couple things. It really is plain, really nothing that we really need to draw your attention to that next section. As far as legislative and informational items, I've got, we try to update this as much as we can on an annual basis. It's not actually required, any sort of communication, but we're heavily involved in some of the associations, some of the municipal finance associations throughout the state, involved in some of the legislative committees. So as fast as we get the information, we try to disseminate that out to our local units as fast as we can, but we also put it in writing so you've got it and you can put it in your file, and if things change throughout the year, we'll get that information out to you as well. We also try to inform our clients of the firm through some trainings as well. So we've actually got an upcoming training that talks about new standards that are coming up. It's really finance driven, and I know some members of the finance department are going to be there next week, and we'll get into more depth some of the upcoming standards and how they're going to impact the township. They'll come back and they'll be all excited to talk to you about the new standards and what they're going to change and what needs to change, and we help the township implement those as they go forward. Some of the things that are coming up that may not have a financial impact, or some things that are relatively new that are still hot topics in Lansing. It really relates around Public Act 202 of 2017. So we talked a little bit about this last year. Really what Public Act 202 of 2017 was, it was the legislature really given some direction to try to get a handle on unfunded, we'll call unfunded legacy costs in the state of Michigan. When I say unfunded legacy costs, really related to outstanding pension or unfunded pension liabilities, as well as OPEB liabilities. So beginning with last year, there is a requirement for every local unit of government that has a defined benefit plan that falls under one of those two categories, either pensions or OPEB, to now start reporting out on the financial information, which includes the assets and liabilities, what the annual actuarially determined contributions would be, and what those funding levels are. And if those funding levels aren't at a percentage that the legislature in discussion with Treasury came up with, there's certain other information that the local unit will have to provide to determine if it's an underfunded plan. That percentage number right now is 60% with pensions and 40% with OPEB plans. So when you don't reach that percentage, you can apply for a waiver. If Treasury denies it, you'll get into a corrective action plan. So the township's working its way towards the OPEB liability right now on the pension side. You need to, you're continuing to be in pretty good shape. But it's, the OPEB liability, I've been working with the township for some time. Township really got on this whole funding OPEB thing long before others even thought about it, before any standards were implemented related to the funding. So the township has been very good about proactively funding this liability and continues to do so. So you're on a good track as far as that's concerned to continue to stay ahead of the game as it relates to those funding levels. Revenue sharing on page 8. This is more informational. So I would say probably the second largest governmental revenue source for the township after property taxes is revenue sharing, and that's really twofold. There's the constitutional monies that come in from the sales tax that's paid to the state and then redistributed based on a formula to the local units of government. So that's that first line item that says constitutionally required payments, and then the CVTRS, city, village, township revenue sharing. So they came up with a pretty good acronym there. There actually used to be a formula for that. It was statutorily driven, so this isn't actually an appropriation from the legislature. They've kind of changed the requirements and how they're distributing that. I'm not saying redistributing anymore because it's not really tied to sales tax as much. But you can see where it ended up in 2019 budget. Now when I say 2019, the final budgets, those are based on the state's year end, so that'd be the September 30th, 2019. So that's where it's budgeted. Hopefully that's where it's going to finish. They've got some time to adjust it if necessary. But if you look out 1 year into 2002, you can see that there's anticipated increased sales tax revenues that the state believes it's going to bring in, which will be constitutionally required to be redistributed, and the appropriation, at least now in the preliminary budgets for 2020, looks like there's going to be an increase in that as well. So again, important, it's the second largest revenue source from governmental funds, for your governmental funds that the township has. The next page on page 9, we have been talking about this for a little bit, the personal property tax changes. So I think we're in year 3 or year 4. Year 3. There's been a change in the redistribution of personal property tax. So when the change went through in the modification and the restructuring of the system, there was a real concern there, on whether or not lost personal property taxes would be reimbursed 100%. There was a formula, in fact, written into the legislation. There was formulas really as to if not enough monies were collected, what was going to be the distribution formula. So this is the third consecutive year where not only have local units gotten 100% reimbursement based on the formula, but there's been extra monies in the pools that have been redistributed. So that's good news. What I still caution my local units of government, you treat that kind of like an extra present at Christmas, because you can't always count on that, but it's been good to have so far. What's changed for the township this year is just the cash flow on that. So there's two components. There has been two components. There's the 100% reimbursement, and there's the distribution of the excess monies. So the first couple years, what was happening is the township would get that payment in February, and based on the accounting rules, any revenue that's received within the first 60 days under certain criteria actually can be recorded as revenue in the previous year. So for instance, the February 2018 payment that came in would have been recorded as revenue in 2017. What happened this year is, just based on some concerns they had about, in case there was any changes that need to be made in any initial allocations, the February payment is only including the 100% reimbursement. Then there's another payment that comes in May. And if there's any extra monies that come in, or if there's any extra fundings that get distributed to the local units, that comes in at that time. So you'd still be getting the same monies, essentially, if there's an overpayment. The only difference is, because the main payment comes longer than 60 days out, that payment gets recorded in the next year. So you've already, in 2019, you already have an LCSA payment related to your main payment. So it was just a change in cash flow and timing on when those monies come in. We have a chart on that on page 10 if you ever need to refer to that. Couple upcoming pronouncements. On page 12, and I don't want to spend too much time on it because I know Kathy and Yvonne will probably be updating you soon on this stuff, but these statements that you're really looking at are a result of what I'd say is was a pretty significant change in the reporting model back in around 2003 with the implementation of a new standard. So we've got these fiduciary activities change under GASB 84. It's a pretty significant change in how you're reporting your fiduciary activities. So there's going to be some funds that are coming in that you haven't historically reported on. There may be some that are falling out. It's going to be implemented in the upcoming years, and we're going to be working with your finance department to ensure that information is reported and recorded correctly. So you'll be getting used to, and there's some other upcoming changes as well that are being suggested. It's, I'd say, like 5 years, maybe 6 years from now, the statements will have, it won't change your accounting and what finances do is reporting and recording the information, but what's being reported in this book might look a little bit different. But we'll keep you educated along the way as the GASB provides more information on what those statements may look like. Won't change what you're doing. That's really dictated by the state. The reporting model, how is reporting out might change. So with that, I'd be happy to answer any questions on anything we either covered or didn't cover this evening.
Mr. Mansour?
Mr. Hessler, I haven't had a lot of time to study the May 28th, I think, what do you call it, the covered letter?
Yes.
But I do have a couple of questions about the legacy cost and what you talked about just a minute ago. So at the bottom of page 5, it talks about, for many government, these net liabilities are significant addition, blah, 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 but let's see, the pension system and OPEB plan are 69.5% and 23.7% funded respectively as of December 31st, 17 and December 31st, 18. Okay, so in this, I'm trying to figure out how to interpret what that said versus on page 7 when you specifically split out OPEB versus retirement pension plans with different thresholds of I don't know, basically underfunded status, right?
Yes.
So what I'm trying to get to here is two things. First, shouldn't there be 4 numbers here? So we have a pension system and an OPEB plan for 17, and then a pension and an OPEB plan for 18. And then also I'd like to see if the difference in the funding that was reflected on your report where we significantly deteriorated, if that was due to the restatement itself, or if there was some lack of funding that caused that.
Okay, so I'll try to answer those
Yep.
as best I can. So on page 7, so the items on 1 and 2, we've summarized the key components of Public Act 202. So those are the statutory requirements.
Yep.
So that's the 40% on the OPEB side and the 60% on the pension side.
Yep.
If we go forward or go backward, I guess, to page 5. So there's some accounting jargon or some of the standards. The liability is actually based on a measurement date. So the measurement date the OPEB plan is really the township's plan. So the measurement date is always going to be the same date as the township's year end. So it's going to be December 31st, 2018. The reason the 2017 number is, we're using December 31st, 2017, that relates to the MERS plan. So that's not a township plan. You're in the MERS plan, so you're using their year end. MERS does not finalize their report, and in fact, has it been issued yet for 18? So it hasn't, but the standard allows you to actually report that 1 year in arrears. So the township, when it elected under GASB 68, actually reports that liability 1 year in arrears. As far as how it's been moving, the liability.
So I still didn't, so excuse
Okay.
me. So again, I'm looking at a 2x2 matrix where you have 17 and 18, pension and OPEB.
So 17 is pension, 18 is OPEB.
But on page 8, it looks as if there are two separate OPEB and pension. For you're saying not for both years.
I'm sorry,
The statutory underfunding looks like there's two different levels there.
well, the township has one OPEB plan and one pension.
Yep.
Okay, the OPEB plan is measured as of December 31st, 2018.
Okay.
The pension is December 31st, 2017. The OPEB follows Rule 1, pension follows Rule 2.
Okay, so we would get corresponding numbers, what, next
Yep.
year?
And I will show you on page, if I can ask you, so I'll get you through that part. Now, if I can ask you to turn to page 55 to start. So this is, I guess, going to be kind of good with some of the reporting requirement. So one of the other requirements, I'm going to start with the pension side, is there's a requirement now, and it'll grow to 10 years worth of financial reporting. But you'll see on page 55, you'll see the pension liability, the net position, which is halfway down the page. That's really the asset side of this, and then the net position. So the activity for the township's pension fund for the last 4 years. So you can see, what caused the overall liability to grow or decrease, what caused the net position, the assets to increase, and where you ended up at the end of each year, as well as the funding percentage, which is the third line from the bottom. So that's year over year over year. The implementation really of the new standard really doesn't impact that, because that would actually have been adjusted as of the first day of the first year of implementation.
So this on 55 showing the pension liability,
Yes.
which we're looking at the requirements on page, 7?
Correct. Yeah, so on page,
So we're at 60% is what is required, right?
the minimum requirement is 60%, correct. So you're at, as of the measurement data for this audit report, which was December 31st of 2017, you can see you're at 69.52%, which is up from 2014, where you're at 58.36%.
Right, at 18 million, basically. Oh, yeah.
And
Okay.
you can also see that liability, the overall liability, has decreased during that time period from 7.7 million to 6.7 million.
So again, going from 16 to 17, I suppose here. So total pension liability, again, was almost $21 million at the end of 16. And it increased 1.2 million in the end of 17, right? 20.979
Yes.
to
So
22.
right, the overall liability would have increased 1.2 million. The overall liability. Now I'll ask you to drop down about 7 or 8 line items.
Yep.
The change in fiduciary net position, which is really the asset component of that, actually increased 2.7. So as a result, year over year,
Our
your
funding went up.
liability
Was down.
went down 1.6 million.
Okay, and the contribution that the township makes to, we see that, right, in this thing that says contributions employer? Where it's
Contributions employer, correct.
So a $400,000-ish dedication of the township here to addressing.
Yeah, and
right?
if I can ask you to turn the page, the township has been proactively trying to address this liability. So if you go on to turn over to page 56, there's a 10-year running total of contributions. So you can see for 2017, because that's the year that we're reporting on, you can see on the first line the contribution, the required contribution was $978,000. The township has contributed $1.6 million. So you're addressing that liability, the funding, and that's why that number is going higher. I was going to say going down. The liability is going down, the funding percentage is going up.
So looking at that 10-year spread here, so 2009, the required contribution was $635,000, and we contributed $635,000.
Correct.
And you look at 2010, $573,000 we made. So basically, we made the required contribution up until 2015. We made just the required contribution, but in 2016, the required contribution was $893,000. We made a contribution of $1.2 million.
Correct.
2017, the required was $978,000. We made a contribution of $1.6 million. So.
Correct.
So is the contributions covered by payroll, or the difference there, the drop, is that due to the statement, or how? I'm just trying to get to what causes kind of the, well, I guess it's an improvement here.
This is absolutely an improvement.
It's all due to our contributions.
It's due to your contribution.
Fine.
So so really the things that impact it the most are changes in benefits, contributions,
Yep.
and history. So how well are the investments doing, and those type things. So on good years, you're going to have, your assets are going to do a little bit better. On the OPEB side, it's really the same kind of information, except since it's implemented this year, we only have 1 year of information that we're reporting out on.
Thank you.
So we've been putting a dent in the OPEB and the pension liability. So.
Pardon me?
I said we've been putting a dent in it pretty significantly over the past couple of years.
Absolutely. Absolutely.
Any other questions?
No.
Mr. Massey?
Yes, Mr. Chair, it looks like on page 56, we didn't do much until 2016. Is that true? We probably in layman's term, just really touched it just a little.
In 2015?
Up until 2016.
Right, we basically were making the minimum payments
Yes.
up until 2016, kind of like having a credit card and just making the monthly minimum. Ms. Lane?
But that is not, the reason that we held the minimum was when we had the economic downturn in 2008 and our taxable value went in the tank, and we had to survive by being very, very conservative with our money.
Mr. Limito?
So for the board, when you're looking at those numbers, like the additional contributions that we made in 2016 and 2017, again, that's the excess fund balance in the general fund, and you'll see it again this year. We put it towards OPEB for 2018. because it's a bigger challenge. We had a bigger hole to fill. So that's why you didn't see, that coming along. We made some changes contractually in 2016 when the contracts went into place as well, because you could have phased in over 5 years the amount. We took the full impact for the MERS defined benefit plan for the police, which raised the employer's contribution level up a little bit, but it also raised the employee's contribution up a little bit. So rather than try to phase it in, we've been much more aggressive, including that defined benefit plan. This last year's contribution, we decided to focus on OPEB. You'll see that the recommendation this year, that what we have made, the recommendation is again strictly towards OPEB. And again, it really comes down, it's a board's philosophy that you could change that if you wanted to later this year and split some and put it back into the defined benefit plan. And we do have it supplemental, so it doesn't impact the percentage that we have to pay. It just helps bring that fund balance up or down depending on how you look at it. But it's really up to you guys, like how you want to divide that out. When we bring the fund balance down to the general fund balance to the 12 to 15% that's board mandated, this year, I don't remember the dollar amount.
It's like 1.6.
1.6, thank you. So we're recommending that we put the whole thing towards OPEB. We're obviously 23.7% funded right now, where we're 69% funded. We should have the MERS by the end of June. We'll have our MERS actual evaluation, and we'll see what the impact's been on the changing assumptions there. But realistically, our biggest hole and our biggest challenge remains OPEB at this point.
Well, and I think that I want to give some of the credit, not just to the economy, but to this board and to Mr. Limita for making the effort to make contributions against this. It's not just simply a matter of the economy causing this. This board's made a conscious effort, and along with Mr. Limita, finding ways to do it, whether it's through contract negotiations or figuring out where we can make it. Mr. Mansour?
Yeah, so is there a similar schedule to the one on page 56 that has to do with OPEB? Is that
Right.
coming later?
Yes,
Where
so
we could see the excess?
Page
Yeah.
57, so we got one, so like I said, we had 4 years of history, we only have one
Okay.
because if you turn the page to 58, we've got a 10-year history of funding. Now, the one thing we need to keep in mind when you're looking at this, and the first thing that I jump is, I'm going to say is, well, why is the actuarially determined contribution so high? The Michigan Constitution has always required that the annual required contribution to pension be paid. Like you'd be in violation of, if you don't make a contribution equal to that, you'd be in violation of the state constitution. There's no such constitutional requirement as it relates to retirement benefits. That isn't necessarily why it's that, but reality is up until a standard about 10 years ago, that liability was never measured. So there really wasn't anything necessarily to fund. It was a pay-as-you-go. We'll figure it out as we go along. So whereas a pension, you've really been funding in perpetuity, the funding of this benefit, even though it had been promised, is relatively short-term. But if you take a look at, the supervisor had indicated, if you take a look at the funding of that, because again, the township, as it relates to OPEB, as far as my client base, started funding it actually before the requirement to even address the liability. You would start putting money aside, knowing that at some point this was going to come to bear, and there's going to be some significant cost. But if you take a look at the contributions in 2009 at the 800,000 to where you're at today, again, it's more of a focus as to we've got really two pools of liabilities. It's up to the board to kind of figure out, how to fund each one, with the exception of actually having to make the actual required contribution as it relates to the pension.
Yeah, so in this one, in the pension, it was clear $700,000 was our contribution above the minimum, right?
Yes.
In the OPEB, is there a similar, it looks like $200,000 or?
On page 58?
Yeah. Is there?
No, it's the actual required contributions are those really big numbers across the top. Like the 3.1 million, that's the required contribution.
But the change. So we just made $60,000 contribution increase year over year.
Correct. Well, I mean, maybe you made, no, yeah, 200,000, right?
$200,000, right?
Yep, $200,000
Okay,
more.
that's fine. Fine, okay, thanks.
Mr. Lima, do you want to comment on the OPEB?
And so the board's actually been putting a significant amount of additional funds towards OPEB for the last few years. And you don't see it here because we've been under that actuarially determined contribution, our ARC, and that's when we filed our 202 waiver and it was denied, and then we came up with our corrective action plan that the board approved earlier this year, is that we have to get to the ARC. We have to get to that $3.2 million payment plus additional if we really want to move it forward. And that what we're trying to do is really aggressively go after it till we get to that, at least to the 40% funded ratio, so that we get off the requirement for having a corrective action plan. And so even though you see like, man, we put an extra $1 million on there last year, how come it doesn't show that we were above the ARC? Well, even with that additional $1 million, that's $1 million plus the pay-as-you-go amount, it still fell short of the actual actuarially approved required contribution. So it's not like we did anything wrong, it's just that we were still coming up short underneath what we should be paying to fully fund it.
And then one other thing is timing's everything. So on page 57, this is a December year end, and we know what happened to the market as of December 31st and where it's at today. So if we took that measurement today, what's now showing a loss, but if we extended that out to this period where we really not incurred anything except for the normal cost, those assets are worth significantly more than they were just 5 or 6 months ago. So keep that in mind too, is especially when you're looking at investments, they're longer period. And then you'll notice a little bit higher in that chart on page 57. So you see that big negative $2.5 million number. So negative in this case is good. That's your liability going down. So you had some changes, getting into really an investment type plan where you're earning better monies. And I know it's reflective. They look at things long term. Actuarially, it really brings your liability down because the ability of those dollars to earn more longer term has a positive impact. So that actuarial change actually brought your projected long-term liability downward.
Chair.
Yes, Mr. Massey.
So in layman's term, you're saying we're headed in the right direction?
The township has been and continues to be, from the meetings I've sat in, to proactively address these liabilities. To the point where, at least from a treasury and legislative standpoint, it does not deem the pension to be underfunded. So it suggests you continue to do what you're doing. And you're seeing, and I know it's not reflective here because we don't have enough history, but you have been and continually be proactive about funding the OPEB plan. So, 2.374, you're trying to get to 40, which, I think the average in the state on an OPEB plan was like 5% funded. I mean, that's kind of a statewide average. So I don't know, I don't think that's the median, it's the mean. But so comparatively, you're doing a really good job of addressing it and continuing. It's obviously a board decision, but what's being indicated from the statements that are presenting, what I read into this, is you're actively what we call advanced funding this liability. What you're not doing by putting the monies in here is you're ensuring that essentially today's taxpayers are paying for today's services. And you're not kicking the liability down the road, which is where you can get in trouble if, at some point if the cost of healthcare really starts to skyrocket. And there's another component in here, Trustee Mansour, that if you were under 40%, or if you're under 40%, and if you were at under 10% of your budgeted expenditures were healthcare, well, the concern is if you're not starting to fund these and the healthcare escalates, what happens if all of a sudden your healthcare costs 15 years down the road are 30% of your budget? how are you gonna handle all the other service? So it's trying to get you to it's at least try, the state and treasury is trying to make sure that local units are understanding these liabilities and what the impact could be long term.
Limit anything?
No, I think, when you look at that 23.74%, the net position, the net percent funded, that's from 13% from the last actuarial, went from 13 to 23.74%. So I mean, that's a pretty aggressive.
So what is that in terms of dollars?
We went from $4 million roughly to over $11 million today, in about 3 years or something like that. So
That's pretty significant.
So what does that mean in terms of closing the gap to 40?
I don't have it with me, but we did do an internal
Envelope,
projection to
back of the
show
envelope.
when we thought we would get to 40. It's in 2024. Does that sound right, Kathy? 2024 or something like that. And we've also looked at some other ways. We've had discussions with DPW Director Sears about maybe using some of their fund balance to pay off what they have existing, or pay a bigger chunk of it to help move us towards that number. And we're looking at a lot of different options for this year to keep us moving in the right direction. But we do have $1.6 million to put on there this year as well.
Right. Okay. I think unless anybody has any more questions, we appreciate the work that you, Ms. Lewis, have done, and we appreciate our finance department too, and the fine job that they've done in getting the information to you. And we look forward to working on another strong year ahead. Okay?
Thank you.
Thank you.
All right, thank you.
Thank you.
Have a good evening. Okay, let me get. That's weird. Okay, so we will go back to reviewing our Thursday board meeting agenda. And we'll be going through a public hearing for resurfacing and repair of Industrial Park Drive. So, Mr. Laddie?
You have in your packet a resolution that will be in front of you for consideration on item B of your operational issues. The first thing we'll do, though, on Thursday is have a public hearing and take public comment from the property owners and interested residents for the resurfacing of Industrial Park Drive. And I think that we have received, since the time that I produced that resolution, you have received petitions that indicate that more than 51% of the property owners with frontage on Industrial Park Drive are in favor of the project moving forward. I think that the estimated cost currently is $98,343.78. And Thursday night's hearing will be where you will consider, we call it the needs hearing, but where you actually will consider creating the district. You've got the estimate, and then you will again affirm that in the resolution we don't have a notation about petitions, because the petitions came in again after I prepared the resolution. But we'll acknowledge that we've got those petitions, and the majority of those in favor of it. You'll decide whether you want to move ahead with it or not, and then if you do move ahead, you'll direct the supervisor to prepare a roll. I think the roll is going to anticipate spreading that $98,000 or so over the property owners in the assessment. I think we've got a 10-year period in mind potentially. And I also made an assumption that we're not, because of that amount of money, I don't think we're going to bond that. And so I'm guessing, I'm not sure if we have funds available in our special assessment capital project fund to do that or not, but I just don't know the answer to that right now. Maybe that'll be something you'll take a look at?
Yeah, I mean, we have in capital projects fund balance $1.6 million. So if the board wanted to use the $98,000 to do that internally without bonding, we certainly have that ability, and then have it back into that capital projects fund over 10 years.
And you would be able to charge what would be a traditional market rate interest, and I'm thinking that may be bouncing around 3% or so for yourselves. We would avoid any sort of the $6,000 to $7,000 bond counsel cost. So it would save the residents some money, would make you a little bit of administrative money, and so that's something that you can consider. You don't have to decide that Thursday night, you just have to decide if you want to pull the trigger on creating the district.
Ms. Lang?
Normally, when we start our first public hearing, we're looking at a project that would be done in 2020. Is this proposed to be done in 2019?
Yes.
All right, thank you.
Mr. Massey?
Mr. Chair, I'd like for the attorney to quote me the exact $98,000.
$98,343.78.
Thank you.
And that is the estimate of the repair. That does not include any administrative costs like mailing, advertising. There will be interest assigned, and again, you'll have to decide on that interest. So that's just purely the repair cost.
Mr. Mansour?
So two quick things. First, would we have to include engineering costs in that as well?
Typically, I believe the county includes
That
those.
included the engineering costs, I believe.
Typically, the county
What's
covers
that?
those.
That included the engineering costs.
Okay.
The estimate that we got included the engineering costs.
And
That's typically 20.
And are we, originally, some time ago, I think we, in the back of our heads, parked a maybe $200,000 number to fund the DDA. Is that still a kind of a potential need, or can we kind of release those funds in our heads and kind of?
The DDA has made an accounting notation of that $200,000, and the way we've set it up with the township is that the DDA will be able to access that money as they need it. And I think so far maybe we've only kind of earmarked $36,000 or so dollars. And as far as someone who's involved a bit with the DDA budget, we don't need that money to be in a lockbox for DDA. I don't necessarily think we're gonna move through that $200,000 in the next, I don't know, 6 months, 8 months or something, but.
No, and we really talked about doing a interfund loan between enterprise funds to the DDA. And it is on a draw basis, like Mr. Laddie said, so it's what they needed. We know that it's my best calculations, and we'll find out how that comes out through Treasury, but what they're going to get from the July summer tax bill is about $70,000 will be given to the DDA. They won't actually get the full funds from 2018 until February of next year. So I don't know how much of they did go out for RFPs that they'll be considering for some branding and marketing assistance. I mean, I think our projections this year will probably be under $100,000 spent, but it was going to be an interdepartmental loan. This really can be done out of that capital projects fund.
I'd like to recognize also the two Mr. Thompsons here that did the work to get the signatures and help us put the meeting together. So we appreciate your hard work to make it happen, and I think they also own the majority of the properties that voted in favor. So we appreciate all you've done and your contribution towards getting that road done. I'm sure it'll benefit everybody in the community.
Mr. Chairman, could I actually ask a question of
Sure.
the Thompsons if they're prepared to answer it? Do you anticipate when you circulated the petitions that the property owners would want to divide that equally among themselves, or is it going to be based on some different formula?
We basically just decided with the township to divide it up. There's 10 parcels that utilize that road, so we're at 10 equal shares.
Okay, perfect. Thanks.
Okay. Okay, any questions with regard to what we're going to cover on Thursday as far as public hearing for the purpose of resurfacing Industrial Park Drive? Okay, we will have the public hearing on Thursday then. Moving right along, we're going to approve some minutes, unless anybody gets any changes to Ms. Lane. We'll have them as presented. The consent agenda, we have a number of items. The approval of the treasurer's report. Yes, Mr. Mansour.
So, question on that. So I was looking through the treasurer's report and kind of the listing of all the accounts and revenues and expenses and things. And my typical question is there any revenue or expense account that is beyond what would be normal? But in particular, I was looking at the Parks and Rec and Fire. And so are those, given the state of where we are, are we going to maybe need to make some adjustments to those going forward, or?
So let me say this about that.
Okay.
The fire department, because of the actions that we've seen come about since the first of the year, we did our best estimate of the 115 days under the previous fire commission, and then what that balance is. There's going to be some adjustments that are going to be required through there. Obviously, there's money left in the fire commission account that's going to have to be split up as part of our process of dissolution. They had some fund balance in there, so for me to understand exactly where we're going to be, I need a little bit more time as we get through this, and I'll have a much better picture of what that looks like. So we know we have plenty of funds to get us through for this year for fire. So that's not a concern. We have the revenue to get it through. We had the revenue before. We certainly have it now. It's just a matter of, will there be some changes? I would say yes, there will absolutely be some changes to the fire budget as we work through. There may be some additional fund balance that comes over. There may be some additional expenses that I didn't anticipate just as we change this. For Parks and Recreation, one of the things that I'm going to ask the board to take a look at the fourth Tuesday meeting is I've been working with the folks at Parks and Recreation now to talk about our millage funds and what that looks like. We had some allocated in our 2019 budget that the board approved, but in a review of what the biggest needs are, I think that those priorities are shifting. So I've been working with them. We've been revising it. It's going to go through a couple more revisions, and I'm going to bring it back to the board for the fourth Tuesday to take a look at. In primarily, it's going to be focused on our capital expenditures. I think from an operational standpoint, it is what it is from a revenue standpoint.
So just circling back to the fire department one more time, as we change the structure of the fire department with the city, there's some valuations that have to happen and some of all of that. When will we have a picture of what that means?
So we're actually making significant progress. We do have the Metropolitan Appraisal numbers back in. They have been shared with the city. Attorney Laddie and the city attorney Walt Griffin had a conversation earlier. Chief Burdett has sat down with the city's fire chief because they had some questions about the values on the Metropolitan Appraisal. I think that they want some more information on how that was derived from the expert. We've had somebody come in and value the furniture, which pretty much probably has about a zero value. Most of it was aged, but we're trying to button up all of those things. We had from just some of it's going to have to be estimated. Things like the air exchange system that were in there and the rooftop unit, the boiler that fire commission funds paid for. Those types of things we really have to look at. If they're designed to last 20 years and we put them in 5 years ago, we're going to put the estimated value that 5 years have been used up. So it's close. I think that we'll have it, whether we agree on it is another thing, but I think we'll at least have a baseline, kind of a neat package of where we're at within the next 2 weeks.
Okay. That's with the valuation of the equipment, the real property or personal property, I should say. But with regard to liability, since we're on this subject, where are we at with regard to retirement liability?
So we received it last Thursday, and we had Sandy Rodwin in to do an update for the OPEB liabilities for fire. And again, just for the board, there's only 2 employees. No actives are on any retiree health care. It's just 2 retirees, the former chief and administrative assistant. Those numbers came in for present day value as of April 25th, 2019, actuarially computed to be $691,166. The good news is that's down $100,000 from the last actuarial of date of December 31st, 2017. And that is down primarily because of the changes that we implemented on January 1st of this year for the post-65s, shifting from Blue Cross to the Hartford, had significant cost savings in just with those 2 employees or former employees. It brought the cost down $100,000 in a short period of time.
That's great.
So it's $350,000 an employee.
Unbelievable.
Wow.
Nice job, Dennis.
It sounds like a big number, right? And you look at it, and it's, I'm not going to get into HIPAA violations, ages, or anything else, but they both have, it's the employee and spouse. And but the significant changes that went from, we were paying health care costs of over $1,800 a month, and it came down to $429 per participant. So we saved significant funds in the change to the Hartford.
That's great.
Mr. Chair,
Yes, Mr. Massey?
what was that number? 691,000 is
600.
$91,166.
$91,166.
Fabulous.
It's down 100,000.
All right. So anything else with Mr. Gruzak's? Oh, go ahead. Mr. Edkin.
So how does that get split up with the city? How does that work?
So right now, we're working on the general assumption that it's 80% township, 20% city across the board for asset valuation as well as liability valuation.
It's the same for both?
80-20.
Okay. All right.
At least that's our operating plan at this point.
Okay.
subject to change.
Hopefully not.
Negotiation.
And we continue to strive for an amicable breakup, and hope that we can finalize this process in a relatively quick period of time.
Okay, so we'll be able to, we're going to be reviewing, if you haven't reviewed already, treasurer's financial activity. Second item in the consent agenda, it will be a motion to approve CityWorks annual subscription. And this is something that the DPW uses for their work. Third item will be a motion to approve a one-time budget adjustment adding $40,000 into the DPW contingent employee wage account, which is to support the hiring of some part-time clerical work employee for DPW. We have some significant work there that needs to be done. The fourth item, the board will consider a motion to approve the repair of McCandless Road lift station, pumps 1 and 2 by a company out of Belleville, Professional Pump, for $14,350. All these are in the packet, available to the public as well. Item E, the board will consider a motion to reappoint Mr. Ed Brown to the Planning Commission for a term of August 2019 to July 2022, which I'm not sure how many years Mr. Brown served, but he does a fabulous job for us.
Do you want me to look it up?
No, it's okay. Maybe Thursday we can recognize him.
Mr. Chair,
Same with our chair. Yes.
I have one question
Yes.
for the director, Mr. Sears.
For Mr. Sears?
Yes. My question, what is the age of the pump station?
That pump station is at least 30 years old, at
Wow.
least. I couldn't tell you when the last time those pumps were rebuilt. I'm sure they have been rebuilt, but I know it's been at least 5 years, and some of my employees say at least 15. So they've given a good life. We can rebuild them, and they will be sustainable at least until that station's rebuilt here in the next decade.
And the reason I asked the question is because was there another station that was rebuilt in the past, in the last 2 or 3 years?
We've eliminated a station, pump station, but we haven't rebuilt it.
Oh, okay. You eliminated one.
You may be referencing, we're rebuilding pumps at our Embury Booster Station. It's a water station, right?
Oh, okay. Yes, yes. Okay. Thank you.
You're welcome.
Yeah.
So yeah, if we could, on item E, if we can find out what, how many years Mr. Brown served and also Mr. Gellings is item F. We're going to make a motion to reappoint Mr. Gellings as, he's actually the chair for the Planning Commission. We'll be reappointing him for a term of August 2019 to July 2022. And item G, the board's going to consider a motion to approve the annual renewal of the financial software support fee that we use, BS&A software, which is pretty prevalent amongst most municipalities. That'll be for the period of May 1st, 2019 through May 1st, 2020. And that's in an amount not to exceed $34,150. BS&A is, for those in the public, and our board, that it's kind of the backbone of the township in terms of when you look at software and look at anything online, it's BS&A that's powering that. Item H, the board's unfortunately going to accept the resignation of Ghassan Saab from the Planning Commission. And Ghassan would be a great asset, but he has a number of things going on even here in the township. So we're glad that that we will still have them involved in other ways here in the township. Item I, the board's going to also unfortunately accept the resignation of Jim Bush from the Zoning Board of Appeals. And Jim served as a great individual on that board as well. It's a very critical board. Under operational issues, the first item will be that we were going to consider a motion to award a bid for water distribution system improvements to Waldorf and Sons Incorporated for the amount of $828,439. Mr. Sears, do you want to comment on that? Waldorf is somebody we do work with regularly, correct?
Correct, yeah, they are a regular contractor for the township. They do a lot of our water taps, all of our water taps actually. They do some sewer work for us here and there. They're a very good contractor. We went out for bid this spring for several projects that we've discussed in the past that's included in the 2019 budget for looping some sections of water main. One section is on Saginaw Road from where Security Credit Union's new headquarters are, north to where Tech Village is going to be. That completes a loop, and it is going to be another water connection for Tech Village. Another one is on Saginaw Street. It's picking up where we left off from the Pepperwood Drive. We installed water main 2 years ago, I believe. It wasn't last summer, it was the summer before, I think. Up to Pepperwood Drive. This is taking off from there, going north to the city limits. That does two things. That provides water to a very large parcel next to Pepperwood, kind of in behind it. And it also gives us access to the city of Grand Blanc's water system in the future. We haven't been talking with the city of Grand Blanc about that, but we will be addressing meter pits with them in the future. But we haven't addressed any of that yet. So it facilitates a redundant connection for emergency water if we need it.
Mr. Sears, do both of those go adjacent to the road?
They do.
The one that's on closer to Security Credit Union going north, as well as...
Yep, they're both within the road right away.
So are they?
Yeah.
So we'll be taking up part of the road then, or?
No, it's
Oh, it's in the right of
off
way.
the side of the
Okay,
road,
all
right,
right,
yeah.
okay, in the right of
The
way.
one on Saginaw Street, I guess, north by the city is in an easement. We couldn't put it in the right of way, but we did
Okay.
get easements for everything along there, so we're
Okay.
good there. The third connection is actually behind Trillium Cinemas. It connects Layer Technologies to NCG to the parking lot, and what that does is it creates a redundant connection in case there's a leak and we have to shut water down. We have another connection, another source of water for both of those facilities, and it creates efficiency. It's looping the water main. So we have a very, very good turnout. I believe the bid tab was included in your packets for this. Waldorf and Sons was the cheapest bidder, and we consider them a responsible bidder, so we're requesting to award the contract tonight, or Thursday night.
Mr. Massey and then Mr. Mansur, yes.
Oh, go ahead, Mr. Mansur.
I was just gonna ask a question. So we've got a low bid here of $828,000 and a high one of 1.137. I mean, that's kind of a big variance, right? I mean, is that, typical, or is there something else
Well,
that's?
Yeah, I mean, it is typical. The high bid from Rhodey Brothers, they're out of Saginaw, so there might be a little bit more mobilization cost in there. Jack reviewed the bids. I don't know if he saw any irregularities. A lot of them is just how much work the contractors have, how available they are, and how much they want to work.
Okay.
The majority of them, they were pretty close
Yeah.
in there, but I think Rhodey's might be because of mobilization.
Okay.
Rhodey Brothers actually are the ones that demolished Playland, so they did a really good job for us. They just couldn't give us the bid we need, so.
Thanks.
That was my question.
Okay. Guys are thinking on the same line.
Yeah.
Anything else with regard to that, Mr.
Good.
Sears? Okay,
Thank you very much.
thanks. And the next item under operational issues that we'll consider Thursday is the board will consider a resolution to establish a special assessment district for Industrial Park for the road resurfacing, which we spoke about a little bit earlier in the meeting. So I think that'll be straightforward. Mr. Levy and I met with the business owners there a number of times, and we were pleased that the road commission worked with us to see that done. There's a lot of jobs over there, and I think we're gonna help some businesses to, nothing else, stay in Grand Blanc Township, right? The third item under operational issues, the board will consider a motion to waive the time limits for temporary advertising devices for businesses in the Hill Road Rehabilitation Project area and authorize staff to issue permits accordingly. Mr. Lloyd, would you like to speak to that issue?
Happy to. Thank you very much.
Mm-hmm.
We put this request together simply because we're having a number of requests from those businesses along Hill Road who, numbers we're hearing is, 20 to 30% reduction in business. And frankly, I think you can attribute a lot of that to the simple fact that there's less traffic. But those individuals still believe that, advertising and putting additional signage out there, making sure people know that they're open and how and when to turn, they think that'll be an effective tool for them to use to help their businesses survive. And I think when these kinds of things happen and as a result of a public project, we reduce traffic to businesses or whatever, I think it's reasonable to give consideration to allowing an extension of the time frame. We're not looking at changing the type of signs or the size of signs or any of that they can have, simply the duration of time.
Mm-hmm.
And it would only be for that time period in which that project is underway.
I know I spoke with Mr. Sears about, one of the concerns is safety of, some of the workers on the road. And I know, some of the concern is that people looking for a business is a concern as well as far as safety. If somebody has to come to a screeching halt because they're missing the turn, I have seen road commissions where they actually do put up temporary signage themselves for the businesses along, the temporary drive. I haven't seen that out there,
Well, we do have all businesses are open. There's
Right, yep.
those kind of signs out there
Right.
during construction, and that's always helpful. And
Yep.
it used to do that, so.
But, you know, in lieu of the road commission putting up signs, it might be helpful for the businesses to have something just so people can't see it. But I know, you know, I've had residents mention that, that saw it on the agenda that were concerned about the safety of the workers. But I think if we have them put it in a manner, you know, and I'm sure our code enforcement will make sure it's in an area where it's not going to
Oh, sure.
block the view of workers or what have you. It
We
should
still
be
have
good.
all the same locational criteria.
Yeah.
Yeah.
And if the board's, you know, in favor of this type of thing, I would ask, you know, that we consider making this an administrative type of, I'm not sure what it would be called, but that in the future when we have other road projects, because we're going to have a number of them in the area, that rather than having to come to this board each time to approve
Yeah.
you allowing for a longer period of time for the signage, that we make that administrative activity. Is that something, Mr. Limita, that you think would fit within, I mean, it's an operational issue, but,
Yeah, I think as long as we keep it as, I think it fits as long as we keep it as, if it's going to be because of construction projects, I would be a little bit more concerned about what we're doing with the ordinance if we were to make the change that we're making it administrative, that you can waive that
signage,
Yeah.
right, no, it'd just be a length of time thing, I think,
Yeah.
for construction, would that be permissible?
I agree, subject to Dennis's point, that it just be for these, it's not an emergency situation, but it's a specific infrastructure interruption. And I wouldn't want to expand it beyond that.
Right,
Yeah,
exactly.
you'd want to say road construction.
Well, it
Well,
it
could be a
road,
sewer,
could be
too.
Yeah, sewer,
something else,
water.
Yeah.
Well, it's all affecting the roads, what I'm saying.
Mr. Massey?
But that's a good point. We could say
Mr.
road
Chair, I
and
recommend that we
maintenance.
have something documented to that effect, because down the road, I don't want to get into a situation with the board where
Oh, yeah,
someone said, well, you did this,
yeah.
why
We
you
would-
can't do that?
We would have to draft a policy that would allow for that, so that we'd
Well,
make sure.
I think, and again, because this would probably be generated out of planning and zoning, I'm happy to work with you to come up with some language for your consideration Thursday night.
Okay,
That's what we would probably do, is look at our zoning ordinance and make an amendment there and identify an exception to the
Right.
existing, you know, requirements.
what would be allowed to be
Yeah.
administrative
Under certain
decision?
circumstances.
Yeah, and then, again, separate from the zoning ordinance, I think we can get them just a statement of this exception for
Right.
their consideration Thursday.
Okay, perfect.
Okay, thank you very much, Mr. Lane. Ms. Lane?
When you're talking about people's safety, I think that the Mterra employees that have to be there to get all their work done on Hill Road and go across all of these lanes need to be appreciated as to how they're keeping up with the service for the residents, and they're working very hard to do that.
Supervisor Bennett,
Yes.
I just would want to say that I would like, if we're going to do something like that, to pretty narrowly craft that language, because,
Oh, absolutely,
yeah.
yeah. So we won't move forward on it until we have some agreement and we get something documented.
We'll have that for you Thursday.
Okay, sounds good. The next item on the agenda for Thursday will be that the board will consider a motion to increase the fire station number 2 renovation project, or renovation budget from $120,000 to $150,000, and authorize township superintendent to approve and execute all quotes using competitive bidding or quoting process. Mr. Limita?
And so, you know, we had some pretty good estimates, but we didn't have them all in at the time that we requested the board to let us move through. We are still trying to get this thing completed for the end of June. And Mr. Sears, I believe we're still tracking pretty close to where we wanted to hit. But as we were going through it, a couple of other things came up, and the anticipated cost for some additional painting work has come up, and right now we think that the $150,000, just an additional $30,000 would cover us to get us there. We have been putting quotes on everything that we can possibly get quotes on, so it's not just going to whoever. We're getting 2 or 3 quotes on most of the work. The general contractor, we had to move that Monday, and we couldn't wait the 30 days to do that, but everything else that we have put out for, you know, for quotes and tried to balance it. It's just It looks like we need about another $30,000 to complete the project. If you guys haven't seen it again, I mean, it's really come along. We're close.
Yeah, from the tour that we all took before we started to work on it till now, I think you'll see quite a marked difference. I don't know, any comments, Mr. Sears or Chief, on the facility or what? Okay. I think the firefighters that have been in there are pleased with.
Coming in every day, commenting on
Mm-hmm.
what progress is being made.
Okay.
Mr.
Very
Chair,
good. Mr. Massey?
I know at this stage of the project, we're doing some estimation, and I would like to see that raised another 20,000, which is total 50,000, which would bring it up. That's what I would like to see. I want to make sure that you have enough funds so you don't have to come back to the board in case you run into some obstacles that unforeseen.
Mr. Sears, do you have any concerns about us exceeding the 150 on the initial construction?
Well, the two big things that we are facing right now that would put us over budget are painting of the entire apparatus bay, which wasn't included in the original scope of the project, and then sealing the cement floors. That only equals about $17,000. Past that, I'm fairly confident I have everything else accounted for.
What about the garage doors?
The garage doors are included, those are ordered and they'll be
Okay.
installed.
Okay.
We're really on track to have this thing done by June 25th, which was a month before the
We
fire
need it.
department had to be out. That was my goal. So I'm confident in the 150 figure.
Okay.
Of course, it's up to the township board and Dennis if you feel like we might need more. These are the two big items that I have outstanding.
Mm-hmm.
Dennis and I did have a brief discussion earlier about furniture and that. I explained that would probably come out of the fire department budget, because there will be some. There are appliances that we haven't purchased yet, or I haven't really figured anything out for those yet, so.
But I think I thought we had time to come back with that. I mean, we can bring that back in the beginning of July if we're on track from the construction. What we were trying to do was get you to approve us for moving quick and nimble on the actual construction phase. And then for, what we need to do to furnish or appliances, we should be able to put that information together and bring it back to you for the first meeting.
Well, you have a $10,000 buffer as well that you can. What's mine?
Same.
Yours is 500, but you need permission.
I don't see, I mean, with $17,000 in outstanding stuff that we have yet to approve, with the additional 30, I don't see the appliances costing more than $12,000. Those would be some, now, the very, cheap for debt, he likes nice things, but I don't see us going that expensive, so.
Well,
I just appreciate you not addressing this fireman Bob like you did last year.
It takes offense to that.
Plus we know somebody in the appliance business.
We do.
A few people.
We haven't hit him up yet.
Putting 20.
my main concern, Director Sears, is that I know we're on a timeline. We have a timeline here.
We do.
So I just wanted to make sure that you guys are moving quickly and that you have not overlooked anything and that you will have everything that you need from the board.
I can't promise you that I haven't overlooked something. It's
So
a very fast process.
So before Thursday, double check your list.
We
Yes.
will. Dennis and I will certainly discuss it. I'll go through the building again and make sure I didn't forget anything. We're in really good shape right now, though, so I'm
Okay.
very happy with our progress.
Okay, you will let us know
Very good.
Thursday.
Yes, we will let you know Thursday.
Okay, thank
All
you.
right. Thank you.
Okay.
Thanks, Jeff.
The next item on the agenda is that the board will consider a motion to appoint David Robertson to the Planning Commission. And his resume is included. I'm sure most of you know Dave, and he's looking forward to being appointed. I know he's met with Mr. Limata, and he brings some things to the table, I think, for where we're headed with Tech Village and DDA and some other things that I think would be very helpful as far as resources and assets. So Item F, the board will consider a motion to accept the updated fireworks ordinance. And who would like to speak on that issue? Mr. Laddie?
I'm happy to speak as to the structure of the ordinance. I do want to say, though, that the impetus for this came out of the police department. And what we have done is, in response to a change in the state statute, we have taken advantage of the shortening of the days that you can lawfully use consumer fireworks. And you can find that in section F of the proposed ordinance. And what that does is, by my estimation, and Chief, you may correct me if I'm wrong, but that cuts the days roughly in half, in my opinion, maybe just slightly less than half. And I think this was in response, and again, the old ordinance or the old statute identified a lot of different days where you could have fireworks the day before, the day of, and the day after. This whittles them down to basically January 1st, 2 days with Memorial Day, a fairly good stretch from June 29th to July 4th, and then also July 5th if that's a Friday or Saturday, and then Labor Day. And so it's eliminated a lot of the additional holidays. It also significantly changed the penalty for the violations, and we have this identified as a municipal civil infraction, and so there would be a fine of between $250 and $500 for the first infraction, and then essentially doubling each subsequent infraction. What this does, though, and this is from the state, identifies a violation as a civil fine of $1,000. That's significant. But also significant is $500 of each fine collected will be remitted to the township police department, and that is directly from the statute. So that's a good thing for the police department budget if they find that they have violations of this. And Chief, again, you started the ball rolling on this. Did I leave anything out, or did I miscategorize anything?
You didn't. The only thing I would add is that it is beneficial if there's time restraints in the updated ordinance. Our previous ordinance did not, so there's no limit to when these can come off.
Yeah. There's no limit to what? I'm sorry?
Under the old ordinance, there was no time restraints, so we could get calls at 2, 3 in the morning for fireworks and could not use the fireworks ordinance
Because it was...
for enforcement purposes.
Oh, okay.
I will add, though, you did mention, I did see that also in the new state statute about some of that going back to the police department, the civil fines. That was not my intention for researching and going towards this new ordinance, is to make it a revenue maker for the police department. Every year, this is one of the biggest complaints we get at the police department is fireworks. Because, like you said, we had like 13 national holidays before, and it was the day before, day of, and day after when, by ordinance, they were authorized to be set off. This greatly reduces that and will make residents much more happy, I believe.
Mm-hmm. Ms. Lane, did you have a question?
I'm setting up the fire.
This is a regular general ordinance, and therefore this will be the first reading, and we'll have to schedule it again for the second, for the fourth Tuesday, Mr. Chair.
Right.
My question, Mr. Chair, to the chief, have we ever issued any complaints or any infractions to anybody, or have we simply encouraged people to be polite and cease doing what they're doing when you
I
show
won't
up?
say ever issued a citation, but they have been minimal. We try to work with the homeowner or the resident to use some reasonableness in their decision-making and setting off fireworks. Certainly also in the ordinances, use by minors, use while intoxicated, that kind of stuff where they turn into safety issues. We do hold people accountable for those issues, obviously, because we don't want anyone to get hurt.
Mr. Atkins.
When would this go into effect? Would it affect the this upcoming 4th of July, or?
It will take immediate effect upon publication. And so if we adopt it at our 25th meeting, we can publish it immediately thereafter. And I would think we would have it in place by June 29th. So it would hit 4th of July. Now, but again, for the 4th of July period, it isn't that much different, except for the hours. The days are essentially the same. But
Yeah, that was my question. Thank you. Is what kind of promotion we have to give this, because it's in effect, and then potentially a day and a half later, people could be in violation.
Yeah, I would note, typically when we have a new ordinance or a new law goes into effect, we give a grace period.
Okay.
Especially for, civil traffic laws, we give a 30-day grace period, or new speed limits on roads. So we would certainly try to educate our community on that through our social media or other accounts to make them aware of it. And then if we get called, we will respond, just like anything, and try to, again, raise awareness and make them comply, or let them comply with the ordinance.
Mr. Atkins has a rocketry program. I'm just wondering if he has to abide by this.
So you said 2 o'clock in the morning, it's okay to,
That's not exactly
2 a.m.?
what I said.
Yeah, okay.
I hope it's more sophisticated than consumer fireworks. I mean,
It goes a lot higher. I don't know about the sophistication level, but a little more dangerous.
Okay, this should eliminate a few complaints then, I think, with the time frame that being
It
involved.
should, like I said, we get a lot of calls around these holidays and a lot of feedback from the community and potential violations throughout the township. And we respond to all those, so it also free up some of our resources, hopefully, once people get aware and accustomed to the new ordinance.
Right. Okay. Thank you very much. And I'm going to ask Chief to be here on Thursday. We're going to talk a little bit about an award that they received too, that we want the public to know about. Okay, the next item that we'll consider on Thursday will be the board will consider a motion to authorize the purchase of a new single-axle ladder truck from Sutphen Corporation for $844,600.82, and authorize Township Superintendent to sign all purchase and warranty contracts. Chief? Good evening.
Good evening. Well, we've been talking about this new truck for a while. This truck, we sent it out for bid requests about a month ago. We using BidNet, and we sent out 2 personal invitations to some manufacturers that I knew made trucks similar to the one we were requesting for. We received 1 bid back. That was from the Sutphen Corporation for $844,600.82. I'm asking for authorization to take the $468,000 that was placed into the capital fund for the purchase of this fire truck to go ahead and sign the contract and get this truck ordered.
At what time will we have to decide on what color? I'm just looking through here. What color we're going to
Well,
go with?
the color scheme we've already determined will remain the same. Black over yellow, yes.
Black or yellow?
Black over yellow. It's
Okay.
unique because you can look at any fire scene in the news and you can see our trucks right there.
Okay,
Right off the bat.
all right.
Okay?
I know somebody had mentioned pink, but
Pink was not an option that I'm aware of.
Mr. Mansour?
So I have a question about the structure of the payment for this. So maybe I could understand if we keep money in our general fund or in our bank, what kind of rate are we earning on that money?
Mr. Lemina?
That's called, that depends. We have to look at the treasurer again and talk about investments and where it's at. I mean, it's totally market driven on
What's a range, for instance? How much money are we making by keeping?
Well, right now, the rate's about 2.49%, but it's dropping. And all the CDs are coming down too. In the last 2 or 3 weeks, they've been dropping tremendously. Short term and the long term.
So I was taking a look at the discount that's offered. So basically, if we could pay the $468 now and then pay the balance of it, whatever, in a year, I think.
Well, there's numerous finance options that are available to us. If we make 2 payments over a 2-payment period, we will be saving about $10,000.
So yeah, if we take
If you pay for it up front.
upfront, we get so that was actually a $19,000 discount.
Correct.
And so the options are paying $468 and then paying another $400,000 ish.
Yes.
Or we can all I'm saying is by paying an additional $400,000 up front, we save $19,000.
Correct.
So it looks like about 5% to me, which seems
Correct.
like a better deal than earning 2% in our bank. So I'd just like the board to consider that as we think about signing the contract here.
Mr. Lemata?
So operationally, we haven't really talked about it. A lot of this has to do, and if you recall where the board's direction has kind of been on what we wanted to do with financing these vehicles is to build our capital reserve account, pay cash, and not have to pay finance fees as we move forward. Of course, so with the uncertainty of where we're at, we don't have the dissolution done. I think if we did, we would just pay it in full and roll forward. I'm not saying that we won't do that at this point, because realistically, it's really a short-term loan to ourselves from Capital Projects Fund. If he has the $468,000, really, to move forward based upon our millage funds that we've already raised, I think we can probably do that. It's just that we haven't worked that operationally yet. I mean, clearly, if this thing was completely done and over with, I think it would be very simple. We would just write the check and move forward. But let me get a little bit more information on that before we make that decision.
Okay, thanks.
Mr. Massey?
Would it be fair to say we would have enough money coming in from the city to pay for the fire truck?
No.
Yeah.
No money from the city.
You spoke so quickly.
Mr. Massey has a question that, will we have enough money coming in from the city from the dissolution to pay for the truck? Mr. Lemata, I know we've been looking at the dissolution amounts, and I don't know, I guess it's, the assets minus the OPEB and outstanding liabilities, but we'll probably write them a check for that. But there are some other assets that we have to look at as far as that are attached. We mentioned the air handling system, and maybe some others along those lines, but
they don't amount to a significant amount of funds. I mean, we're looking at probably we'll be writing a check to the city if it all comes the way we anticipate it now. If they stick to where they have made the claim that they don't want any of the equipment and that the equipment is all coming to the township. If that's the case, did you get that letter back, or did you get approval from the city, by the way, with that letter that Mr. Barnes sent out?
No, I have not.
Okay. It was reported in the paper again, that's why I'm asking. They said they definitely don't want any
I read the same
equipment,
thing.
so I'm hoping they'll move forward on that so we can move forward.
But what is that letter, Mr. Lee?
It was a letter from just the chairman of the fire commission to the city manager, just requesting written approval from the city that acknowledges that they are not interested in any of the equipment, that they're looking for a payout, not to split any of the equipment. And they've made that claim multiple times. I just want it in writing before we move forward and start transferring titles over to the township name so it doesn't become a point of contention.
When was that letter given to him?
Last week. We asked for an answer by the end of day yesterday. Did not receive it, but I was supposed to ask also for, if you needed additional time, just let us know. And
Have they let you know?
Didn't hear anything. No, I have not heard anything.
Okay.
I hate to put a guess out there at this point, but I think that we'll be writing a check, somewhere in the, maybe the $300,000 range or something when all is said and done.
Okay. Ms. Lane?
In your review of the assets, Mr. Lehman, since the city is indicating they don't want any of the equipment, are we going to keep it all, or would we sell it in order to minimize our payment to the city for any equipment we don't intend to keep for any long term?
We're not reducing any headcount here. We have the same number of employees that we had moving forward. So there's not really anything that we're intending to get rid of. I mean, we'll look at the vehicles that we have in use, and maybe through attrition, if we don't need to replace something, we won't as part of the long-range capital plans, but that's not to sell off anything immediately. I think we'll keep all of the same equipment that we have. We need it to operate a fully functioning fire department. We're still covering 36 square miles.
Okay.
And that's how I look at it.
Unless we have excess equipment right now, but, I don't.
Well, I think once we're done with the dissolution, we'll reevaluate that, and like Superintendent Lehman has said, if it's something that we really don't need for the operations, or if it's excess, maybe we'll sell that off at that time.
Yeah. But it seems like if we have it now, it's needed.
Right, and we're expanding, our township's expanding, so I don't think we would want to release any equipment.
Yeah.
Thank you.
Okay. All right. Thank you. The next item on the agenda for Thursday will be that the board will consider a motion to approve the proposed rezoning of a parcel from MDM, medium density multiple family, to NC, which is neighborhood commercial, and direct the amending the official zoning map accordingly. So who would like to speak, Mr. Lemata or Mr. Lloyd? Mr. Lloyd?
Well, thanks again. Appreciate the opportunity to come forward and talk with you fine folks. This is a zone change that the Planning Commission approved just recently on June 6th. And the property is located on the southeast corner of Saginaw and Baldwin. It's currently generally a vacant site. For the majority of it is. There is a small commercial structure on the immediate corner, and then down Saginaw a little bit further, there's an older home on the property. That's the part that's going to be rezoned. That property is pretty small. It's only 0.32 acres. The zoning, which it currently is MDM, and that requires 5-acre minimum property size, and that's only 0.32 acres. So that in itself is non-conforming. The other part of that makes it non-conforming is it currently doesn't line up with the township's master plan. In other words, the master plan, the underlying designation there is for the neighborhood commercial, but it's zoned for medium density multifamily. And so it just so happens that the property owner is looking to develop his property and wants to have it rezoned so he can fully utilize that other little parcel and make it a more a better project. He has the ability to put in better access and better circulation on the site as a result of rezoning that and using that little corner piece. So through the process of doing the rezoning and talking about it, we also found out, and it was brought forward at the Planning Commission meeting, that that property held a lot of water, currently does. And as a result of those conversations, we were working with the folks at the Oaks and other places to try to find a way to resolve this in conjunction with the current owner, Mr. Blessings. And what we found out is that the Oaks, they've already got a plan designed to take care of the problems that they're having on their property. They had drainage issues. The current property owner, Mr. Blessings, has drainage problems on his property. And some of the nearby neighbors also have issues because there's just so much water out there. Well, the one thing that will happen as a result of a development project is that those drainage issues will go away, because the site will then be required to accept all the water that's coming onto it, manage it, and accept all the water that it creates. In other words, any of the impervious surfaces is going to need to be designed to accommodate whatever that water flow is going to be coming off the site, putting it underground and getting it into the system. And when that happens, a lot of the area around there will be corrected. Part of the problem is water's coming across underneath, I should say, Saginaw, onto this property, and he's going to have to manage that. So through this process, and working with the property owner, the rezoning is very beneficial for him, gives him the ability to do a project that he would like to do. But in the long run, when we get the project in, it'll also help address some of the infrastructure issues over there. So there's a lot of upsides to this. And as I mentioned, there were some owners who came forward at the Planning Commission meeting. Their primary concern was the fact that it might increase traffic. And we explained to them that through the traffic analysis, as a matter of fact, that traffic volumes will decrease on that very small parcel, if you want to look at it from a technical standpoint, because the traffic volumes in multiple medium density residential is higher than the neighborhood commercial. So if it was developed multifamily, it would have higher traffic. So those issues, although they're raised and they're of concern to everybody, they're not valid from the standpoint of that's what will cause greater problems. And the other part is, as I already mentioned, is the drainage. So those issues are being taken care of.
So with that parcel, they could have egress from either Saginaw Street or from Baldwin, from that property?
They could. I believe they're looking at egress exclusively from Baldwin.
Okay.
That's the area, as a matter of fact, it's the area where the house is proposing to be rezoned. That's the area they need to accommodate that better circulation on the site and minimize another street cut onto Saginaw.
Right.
Yeah.
And just for the public, the issue with regard to surface water is actually the county, but
yes,
with this, because I know the township gets plenty of concerns from
Right.
residents, what have you, with regard to, especially this year with all the rain that we've had with surface water. And that particular location tends to get a lot of water.
Oh, yeah.
But anybody with any concerns with regard to surface water needs to be in communication with the county. But it just so happens this project's going to take care of some of it. But it sounds like a great project. Mr. Mansour, you're on the planning commission.
Yeah, so I wanted to just take a minute here and just kind of go back over the concerns of the residents that showed up to speak to this. And they were residents, and this is actually on, it's east of Saginaw and Baldwin, behind that one building there on the corner.
They were, say that again,
It's east of Saginaw on Baldwin, on the south side of the road, just past that new building.
Right.
And these residents are on the north side of Baldwin, so across the street from it. And I think they've been there for quite a long time, and they were just really feeling the effects of the commercial growth in the area and how it's changing the character of kind of the place that they had bought 30 or more years ago. So there's really not much that this zoning issue can do with that. But they did actually have a couple of interesting things to work on here. One of which is apparently in this particular situation, east of Saginaw, the mailboxes are on the south side of the road. So now these residents have to cross a couple of lanes, which is going to get busier over time. And so, it seems to be peculiar to that area, because if you go on the west side of Saginaw, the mailboxes are on each side. So to the extent that we can maybe encourage some change there, I think it would be a benefit to the residents if we could do that. There's also some concerns about they have some small children, and so as the traffic increases, that's going to be an issue there. Can't do anything about that, but where we can help them out, maybe try and encourage the post office to do something to extend that type of service across the street, I think would really help them out, because there's, in terms of the zoning, it makes sense to rezone this one little area.
That and this change zip code.
Of course. Oh, and just as a note here, by doing this piece of development, we are going to extend in a small way our non-motorized path. From the Oaks straight through to all the way east to Saginaw.
Okay.
So there you go.
Part of the Grand Lake grid there.
Little by little.
Okay. So yeah, it's interesting on the mailbox issue. Those houses. What is the zoning across the street? Is that residential?
Yeah, it is
It's residential. Yeah, single family residential. Yeah.
Huh.
They're next to the war.
Well, I knew
Yes.
it had been, but is there any future potential to change that, or?
It's up to you.
But I mean, on our map of future use.
No,
is there
our
any-
future land use still shows it as maintaining and
Residential?
remaining. But we're in the middle of a master plan review,
Right.
so those kinds of things could be looked at.
Uh-huh.
Sure.
Okay. All right, did somebody have their hand up? Okay. Thank you very much, Mr. Lloyd. Okay, the next item on the agenda for Thursday is item I. The board will consider a resolution to approve a liquor license for the 2019 Ally Challenge presented by McLaren pursuant to Act 58 of the Public Acts of 1998. And that would be issued on September 9th, 2019, allow sale of alcohol through September 16th of 2019 at Warwick Hills Golf and Country Club.
So, Mr. Chair, you may wonder why there's a resolution before you again. After
Again.
You've already approved a resolution for this. But I blame Attorney Laddie. It was actually from David's office, Attorney Bill Delzer, who also represents Warwick Hills Golf Club. As we're getting through this, and that's one of the reasons why they wanted to do it sooner, was to make sure that we got all of our T's crossed and I's dotted. And we had you complete the other resolution, and it came back that this resolution in this form was required instead of the other resolution in its form that was provided to us. So it was rewritten and it comes back before you. And the only real differences between the prior resolution and this one that I can tell is that it specifically spells out the dates, that it's from the 9th day of September until the 16th day of September, and specifically spells out that it's at the Golden Hills Golf and Country Club. So it's basically the same resolution that you've previously passed, just with some additional information included.
Okay.
So a question
Yes.
on this. So what's the right way to do this? Do we rescind the previous resolution, or do we amend it, or rescind and do the new one, or do we amend the old one?
I think that we should adopt this resolution with the understanding that to the extent that it contradicts or conflicts with our previous resolution, that this one will be this one will supersede the.
So would we have language in there to that effect? Any previous resolution?
I'm afraid to have to do this a third time, but I'll tell you what I will do. I will have this discussion with Mr. Delzer, and he can advise us if he wants us to rescind the previous resolution. And also tell him that we're not going to do this again, so we got to go this way.
Okay. As long as you have plenty of ice
Yes.
for September, hopefully we're past the rainy season by September. The next item on the agenda that we added was item J, with regard to policy manual for Thursday. And I guess I just want to say that in speaking with Mr. Limita, everybody received what policies we had. There's a couple I think that we want to look at that maybe we'll add that weren't in there. But I would encourage everybody to take a look at that and go through it. What we need to decide is whether or not we need to have, maybe we set aside some time at our fourth Tuesday meeting or another time to actually, if anybody's wanting to sit down and go through each of the policies, with Mr. Limita and see if there's any things that we don't catch. I know I mentioned to him that sometimes if you plan a time and date where you actually do that, all of us would actually go through them and have some discussion, which might spur some thought on any changes. So that's something we need to consider. I don't know if anybody have any thoughts on that. I know Mr. Massey wanted us to add it. Mr. Massey?
Yes. I've glanced through the policies and I saw a couple of changes that I made notation of. And what I decided to do, if the board agrees, is just make the changes and take that policy and pass it on to the superintendent, let him review it and put in the proper documentation or wording as it should be, if he concurs with what I have suggested.
Yeah, I mean, anybody, if you're going through the thing and you see changes that need to be made or want to suggest, I mean, this board is going to, at some point, I know we haven't taken any action on those policies yet, other than that they're in place, obviously, from pulling them out of our files. But if we make any amendments to them, I think what we're going to do is say, okay, here's our policies to date, and any other policies that exist out there that we're not aware of, guess what? If they're not in this book, that when we pass that they're not part of our policy and procedures. Is that your impression, Mr. Laddie or Mr. Limita?
I mean, I guess my goal absolutely was to, every policy that you received in your policy manual is currently in place here at the township. And my goal was to make sure that you guys had a copy of all the policies that we currently drive our actions here for your review. You'll see that some of them were older in a different format, and that's just how they've been since it's been adopted, with no changes, no revisions. I already have Megan Gilman, the administrative assistant, working on putting anything that you saw in that policy manual into the new format, so we have that consistent look throughout it. And then, again, I thought we would do it at the fourth Tuesday, but we can do whatever you guys would like to do on Thursday. Be able to see if there's any feedback and collect all the feedback and review them. Like I said, most of them will have to be, we'll just vet it legally to make sure that we're not making any changes that violate any current laws or anything. And then we also want to make sure that we're not, by the older policies, violating any current labor laws or employment laws. Unintentionally, with the idea that we would, however long it takes us to adopt them, the policies are in place, we're following them now, It's just a matter of if we get it done in July, great. If we get it done in August, great. I mean, it's not however much time the board needs for that comfort level to know that we've got that the policies that we adopt as a slate then become our policy manual moving forward, and then we'll just update the as we go.
No, there's some holes in it too, I believe. I think, one of the things that we've charged Mr. Lemita with is being in charge of operations, and there's no policy in there that states that. I know it's how we govern, but I'd like to see some things like that, because who knows in a year and a half here, after the elections, who's going to be here, and maybe they want to change it, but at least how we operate's written in policy, instead of, well, this is the way we kind of did it, and I know Mr. Massey's been big on let's get rid of the handshake agreements, and this kind of says, hey, let's put it in policy. If we're doing something and have an understanding of how things are done, then let's put it in the form of a policy so that future boards and anybody who's considering running for board can actually pull out that policy manual and see how our policy is structured right now. Ms. Lane and then Ms. Massey. Mr. Massey?
I would prefer personally that we put off any discussion on these policies to at least the fourth Tuesday, because remember, we're having our joint meeting with the Planning Commission on Thursday. We'll have a full board meeting, and by the time we get to the end of a long meeting, we're not as awake as maybe we need to be to go through policies at that point. So I would take it off the Thursday. Well, my suggestion is take it off the Thursday agenda and put it on for the fourth Tuesday to better review them.
Well, it's probably my mistake in putting it on the Thursday agenda, but we wanted to talk about it tonight. But it's going to be a lengthy time to go through all those policies, and it's not going to be Thursday that we do it. But Mr. Massey?
Yes, as I was glancing through the policies, I didn't quite, I guess I should say, I thought that the financial policy should be looked at and revised, and we should have another financial committee meeting.
The task force?
Yeah,
the investment task force?
Yeah, the investment task force committee meeting. I guess the superintendent will set up a date and time for that meeting.
Yeah, I can do that. I would make one suggestion. I know that we were waiting to get some information back from Mr. Michael Berry from BFM. Let me find out where we are with the information that he was supposed to provide back to us. I know we had submitted the information that he had asked for, and I haven't seen anything. I don't know if Director Sostak has seen anything, but I'll find out and find out when that information is going to be forthcoming, and then schedule a meeting when we can have that.
Okay. Thank you, Superintendent.
And maybe Ms. Sostak can tell us by Thursday if it looks like we've received anything or plan to. Okay. I believe, Mr. Laddie, we wanted to talk about some other issues, maybe in executive session?
We do. We have two topics for an executive session. One concerns collective bargaining, and the other concerns a written attorney opinion.
So moved, Mr. Chair, that we go into executive session to discuss collective bargaining and a written legal opinion.
Support.
Okay, there's been a motion support. Ms. Lane?
Mr. Mansour?
Yes.
Mr. Atkins?
Yes.
Mr. Gruzak?
Yes.
Mr. Massey?
Yes.
Myself, yes. Mr. Chair.
Yes. Okay, we'll reconvene in about 5 minutes for our executive session. Thank you.